How's it going, everyone? It's Louis Crypto here, back with another emergency quant update. Yes, I know a lot of you don't like me using that, but CPI data has just been released. I'm going to talk about that in today's update. So we're going to do fundamentals first, and then we'll look at the chart. I'm going to bring your attention to some Twitter posts as well about the overledger platform. So navigate with me to Twitter. Links are in the description down below. This way you can private message me as well if you want more details on how to trade cryptos. So over here, businesses from Quant over here, businesses building on blockchain struggle with public chains charging gas fees. These are charged in cryptocurrencies, which means that businesses have little choice but to hold crypto on their balance sheet. Overledger solves this problem. So you won't need to hold a specific crypto. If you're not aware of what the overledger platform does, I would suggest to tune into yesterday's update. And the last 2 days, we've done some fundamental analysis before heading into technicals. More to do with the overledger platform and how easy it is going to become for individuals and businesses to use cryptocurrency or to use Quant token, because again, we don't need to rely on a specific cryptocurrency to exchange on different chains. For example, it's all going to be done with Quant, so you won't need to pay gas fees, you won't need to hold crypto, you won't need to make a MetaMask or a trust wallet or anything like that. So yeah, really cool. If you want to obviously read up more about it, then just follow the Quant page, and then just click on this and it's going to bring you to that. But yeah, pretty much just go check out those videos from the last 2 days where we are going in depth detail onto that. Today, the detailed fundamental analysis will be on the CPI data release, so we'll get into that right now. Let's now head over to the fundamentals. So we have the CPI data. Essentially, it's just like taking the inflation into account and forecasting what it's going to be. So of course, we did see another increase. So there's still inflation there. However, it was less than forecasted, which is great for us. However, because this is bullish, we need to also have in the back of our minds that the whales might take this bullish news and start to sell. Although right now we're seeing this and this is bullish, how the actual was lower than the forecast. If we click the details over here, it actually says if the actual, this, is greater than the forecast, this is good for dollar. So not good for dollar essentially. So yeah, we clearly saw that it was less than and not greater than, so it's not good for the dollar. And that's why in the short term, we're getting these pumps in the market, like on the very small time frame. Actually, it's a bit choppy, but in fact, this is bullish news. But we really need to keep in the back of our mind right now, retail is going to be going crazy. Oh my gosh, this is great. There's still inflation there, but it's less than expected. I'm going to buy some cryptos today. But on the other hand, we also need to keep in the back of our minds that the whales might use this bullish event in the eyes of retail to dump on us. Okay, so just keep that in the back of mind. It's not prediction, but it's just if we do dump, then there you go, we know why. But if we don't dump, it's because this is bullish news anyway. I'm personally in longs at the moment. I don't really care what happens. This is a trade that I did actually post in the Discord community over the last what was it, the last few days. I think it was the end of last week. Over here we were in a range bound market, so just taking it back up to the range high. Technically could just close it over here, but yeah, looking for an eventual break to the upside. I'm not worried. My stop loss is now at entry, as we're somewhere in and around over here. If we just now look at Bitcoin real quick, and then we'll head back over to Quant. So yeah, I don't really mind if I'm going to get wrecked, as this is now a risk-free trade, and this is something that I urge my students and teach my students all the time, that by protecting capital, you're in turn going to make money. So that could even mean not trading at all, taking big gaps between trades, because the more you trade, the more times you're willing to lose. Essentially, every time you open a trade, that could be a loss. So by trading less, you're reducing the amount of losses that you take. You can see here that when we did enter, trade went into minus, but as long as it's beneath the range low, my stop loss, then we should all be okay to eventually break up. And then there's a lot of people trolling, saying, haha, look at that dump, it's a scam pump, now we've dumped on you. That's hilarious. And again, in my last Bitcoin videos, if I didn't make a Bitcoin video, it was at least in the chat, or it should be in the, however long ago the last Bitcoin video should be in there, or the Twitter update. So make sure you're following me there, that we were just dumping back into this previous resistance that was struggling to break through, and now just flipping into support, and we saw the moving averages holding a support as well. So expecting price to continue higher, but even if it does go wrong, stop loss is above entry. My stop loss is now here, pretty much in line over here, about 30,380, in and around that area, just beneath those body candle closes. So pretty much $30,000 and $400. But now let's head over to the Quant update. I hope you guys have enjoyed that video so far. If you want to see more fundamental analysis, then please do let me know in the comment section below. I did have a handful of people saying, yes, we want to see more. If you want to private message me for more details on how to trade, just as you saw in the Discord community there, if you want to be part of that, whether as a student or just a member of the chat, private message me or click those links in the description and you could take action through this link, or a single mentorship session just to see how it is. Thank you guys. Now, Quant over here, we can see that we're still holding $101 to $102. This is our support currently, and if this were to be lost, we enter that massive range between $94 and $100, which, as we zoom out to the daily time frame, is what is technically keeping us bullish. If this is lost, then we're going to finally meet those targets to the downside. We have three things pointing at $83. Essentially, if we look to the left over here, we have got a great wick down here at $83. I'm going to mark that out for you guys. So there we go. We know that if we do ever lose $94 to $100, cause the 94 is the lower part, if we lose $94, then we've got an $83 target. We have some confluence just there, because as we pumped from this location up into that high, started to retrace that back down. If we create the reversal wave, we're looking at all of these as targets, and we've got some confluence at the 2.272 Fibonacci at $83. So two things talking about suggesting $83 if this $94 area is lost. Then we have that head and shoulders pattern over here signaling for an $83 target to the downside if we do lose this neckline, which is of course valid ever since April. We validated this pattern early April, and every time we've come into this ascending resistance, it's just been acting as a top, and we've been getting rejected from this ascending one, but also horizontal resistance from around $111. Can you see that support, wick right there as support and now as resistance? So a clear support and resistance flip over here, and every time we've rised into that area, we can see price dumping. So it's an ascending resistance as well as a horizontal one, and this is as we can see, been in a range bound market, so good points for exits. Now we are at the range low of this range bound market. It's good point for entry long term, of course, just to DCA. That is essentially what we've been doing the last few months every time that it's approached this $94 to $100 region. So what we now need to see to go ahead and invalidate this pattern's target is continue to hold above this and break through this 111 and this ascending resistance over here to head to the 0.5 Fibonacci, which is $132. On the break of that, we're basically reclaiming this previous double bottom neckline, head and shoulders neckline, and another ascending triangle over here that did fail. But it's basically going on that original path. So if I go from here to there, we can see essentially if we ever get back above the 0.5 Fibonacci, you got an exact target at $175 or just a bit beneath at the 618. So nice to see patterns calling for that. But also the Fibonacci is telling us this. Can you see the 382 Fib down here? We're at $100 exactly. So this $94 and $100 region is keeping us up as support. And while we are still above this, it's going to give us a rally eventually up until this 0.5 Fibonacci at the 1382. Just as equally, if we break through this, we go to the next Fib. But we also had a pattern over here, this double bottom, that of course failed. But if we ever reclaim that level, we go on that exact same path. And the Fibs say we're going there anyway. And we've got a double bottom formation saying we're going up there regardless. And all that's stopping us from getting to $130 is this range of resistance over here, 111 all the way up until that wick over there, $120. So that's why they have been targets for us to the upside. So I want to know your thoughts after today's CPI data release and what your thoughts are going forward with what Quant could be doing. Do you think that we could head down to $83, or do you believe that this is a solid block of support, brick wall, and that we will not push through, and all of this is just a long accumulation? And we're just looking for a break above these this $10 $11 region over here between 111 and 120 to actually head to 130, and on the break of that to $175. And all in all, from today's current price, this could be a massive gain of about 70% ahead of us, guys. Thank you guys so much for tuning in. Make sure you have like, subscribe, and comment. If you want to private message me, whether you want to do the mentorship, the course, or just join that Discord community so you can be part of that. A lot of people do post their own trades. We saw that trade on Bitcoin that I currently have, which is still in profit as of now. But again, even if it does go wrong, guys, we've secured profits by moving our stop loss to entry over here. So that's it from me today. Again, like, subscribe, comment. I hope to see more of you joining the community and becoming self-sufficient traders under my guidance. Thank you, guys.